So we are going to start where we left it. Actually, last week we discussed about we shared the syllabus and we discussed about the Nigerian legal system based on how the sources of law, where and how we get the laws that we are currently using in Nigeria today. And also, we discuss our legal systems, the type of courts that we have in Nigeria. Today, we are going to move further to the chapter 2 of the course. I hope you all have the note I sent to the group. All right? Do you have your note with you? Abdurrahman, do you have your note with you?
Yes, sir.
So why no one can answer me when I'm asking? All right, that's good. So today, let me start share my screen. So can we all see my screen?
Yes, sir.
Yes, sir.
All right, that is good. So this is the chapter 2 of corporate business law. We are still maintaining the existing study test and based on the old syllabus, but our focus will be based on the new syllabus. Previously, it is being called business law, and now it is now called corporate and business law. That's so that there are some amendments or adjustments to the syllabus and to the content as well. But the first thing that you should know, if you have this existing pack, especially a complete one, you can still make use of it well, because in time of structure, the chapter, the syllabus, actually there is no changes. So what change is law? No, law keep changes. And when we are reaching some aspects, some topics that their law has changed, that we have the new law. So we are going to explain based on those new law. We keep ourselves up to date. So that's so that it will be also be good for you if you can have your paper and pen, so that when we are getting to where you're supposed to make a correction, you should note it down. So today we are going to be discuss about the types and the formation of business organization. Types and formation of business organization. We have different type of business, and the fact that we have the different type of the business, we also need to know that we should have the different type, how they are formed, since the business is not all the same. So their formation too shouldn't be expected to be the same. So that is what we're going to be look at today, and we just want us to do it quickly without missing anything, because we are just going to spend an hour. Maybe I'm going to time myself 40 minutes for lectures and 20 minutes will be for questions. I have another meeting by 10 p.m. So I'm sharing my screen. The content of this chapter 2 start with the purpose, introduction, type of business organization, registration of business name, the distinct between a partnership and a company. So those are the things that we are going to be look at in these chapters. So from the chapter 1, you can see this introduction. Let me see if I can see anything to be highlighting this. Okay. This this one cannot give me exactly what I'm looking at. Let me check if I can see another solution. Yes, having some late comma, right? Ahmad, you are a late comer. Okay. Don't think I can make it bigger than this. Okay. Can we still see my screen? Are we together?
Yes, sir.
All right. So from the introduction, you can see a promoter. I think this thing is going to give me, if it's not going to work, so that we not. waste our time. So if you see my circle, a promoter that is a person that takes part in the forming of a company and raising capital for it may choose from three business organizations to form. And these are sole proprietorship, a partnership, and incorporated company. So in Nigeria, generally, this is the three type of the businesses that you can form in Nigeria. You can register as a sole proprietor, which is also called business name. When you say you register business name or business enterprise, so you are registered as a sole proprietorship, and you can also register as a partnership. You can register a partnership, and you can also register an incorporated company. So this incorporated company can also be divided by two, can be limited by shares or limited by guarantee. We are coming to that. So a promoter, as far as law is concerned, so I think these people that they are joined, let me see what I can do. Maybe probably I can make any one of you as a co-host. Think I'm just going to continue like that. So a promoter is the person that participates or that help to form a business. Because as far as law is concerned, a business or a legal or a company, because you don't want to use business. Business is like general term. So you may have the business and not register it. But let me be referring it as company. So a company is a separate legal entity that's different from the owner. So what that means is if you have a company, now that company too is a legal person. Let me be closing to the layman voice. Is a legal person that he has the rights. The company, it has the rights, the same thing as you, human being, has. So they recognize the company as legal person. They say it can sue and be sued on its own name. So what that means is you can take a company, you can sue a company, take a company to court without affecting the owner of the company because the owner is just contributing his money, his share in the company. That is only thing that is in that company. So you can take the company to the court, has the case with the company without affecting the owner of the company. And the company too can also sue you. The company can take you to court on its name without any interferences from the owner of the company. So the company and the owner, they are separate entity. So this promoter is like the person that brought the company into words. So and once you brought it into life, you don't have any business to do with it again. Like as a woman being, when they want to boss, they have to get pregnant, born person or this thing. So the company too, one person has to facilitate his existence. So the person that do that register the company, because you may register the company and not in your name, even you don't have any interest on it. It is a promoter, and it is common in the public company. So when you see public companies like Guinness, most of the oldest big company, and their share are traded, you cannot even identify who found them because those ones has gone. So they are promoters. So that is the meaning of promoters. And the process of bringing the company into existence, they call it flotation. And say you float a company. You maybe see it in your uh, general words that so person floated the company. So the person that floated the company is the one that bring it into existence, and it is not necessarily that the person is the owner of the company or the person has shares in the company. So the type of the business, I think we can go to our wide screen since we cannot use this very well. So type of the business. So we have sole proprietorship, otherwise known as one man business. You just register your business. So for a sole proprietorship is slightly different from the other company, like other type of the business, like partnership, because for the sole proprietorship, they regarded you and your business as one. So your company debt is your own debt. Your own debt is your company debt. Your asset is the company asset. The company asset is your own asset. So there is no differentiation between the owner of sole proprietorship and you have the business name. So that is the first type of the business. And the other type of the business is partnership. So a partnership is an association of at least two persons for the purpose of a business, profit making and profit sharing. So before you can register as a partnership based on the old law, so you can use business name as a partnership. You can register under business name, but you are a partnership. And some of the businesses or services require partners, like a law firm, accounting firm. So when you become chartered accountant and you want to practice, so when you want to register your company, you have to register it as a partnership, Abdurrahman and Co. So, but there are other business, normal business too, like trading. You can also register it as partnership. So here we have rules of determining the existence of partnership in general. So there must be a business, and the business must be carried on by or on behalf of the partners. So that is one of the first rule. There must be a business. You cannot say you are partnership without existence of the business. What are you partner for? And that business must be carried on by, that is by the partners or on behalf of the partners. They may have person that is managing it for them on their behalf, or one partners can be managing it, because we also have different type of partnership. And for this partnership, there is a lot of changes. Changes like uh, one of the law of when we are discussing our sources of law last week, I made mention part of our foreign law that we have adopted in Nigeria. One of them is a status of general application. I told you that some of the law that is being enacted in the United Kingdom before our independence. So some of that law, if we don't have any law in Nigeria that can cater for it, we are still using their law. I give you example, Partnership Act of 1889 or 1989. That is their law. We are still using it. We have six acts. It's a foreign law. We are still using it. So those things are the one that's actually reflected here. But recently, that is one of the changes. So we have Kama 2020, which has changed the type of the partnership, the formation of partnership. So before, I'm expecting you to read all these notes. So we just share some of the changes. Some of the changes here, especially this case. So it's one of the things that's important. So based on the current law, a partnership must be registered under the Company and Allied Matter Act 2020. That is the CAMA. So, and if the company is registered, so there are also law to the limit of members of those company. If the partnership is meant for trading, like you are into trading activities, you have the minimum of 2 partners and the maximum of 20 partners. If you are into trading, that is, you form partnership for trading activities. Maybe you are selling goods or you are doing other businesses. But this law, there is exemption. If you are a professional, a partnership that is formed by professionals, it is allowed to have more than 20 partners. So that is very important for you to note. So a profession like a law, if you have a law firm and you register as a partnership, you can have more than 20 partners. You can have as many as you like. If you register as accounting firm or audit firm, you can have partners more than 20. If you register, maybe you are registered as a quantity surveyor. So any profession, if it is professional partnership, the law exempted you from that 20 partners limit. So that is one of the things that we need to note the here. So there are many law to it, and you need to read. So type of the partnership. So before, we used to have 3 type of partnerships. So maybe when you are reading deeply, you are going to get all of them. I'm telling you this based on the standard. You may not even see them in the notes. So we have general partnership. So general partnership is type of the partnership that all the partners, they are participating in the running of the business. They are all involved. That is the general partnership. And we have limited partnership. Limited partnership. So limited partnership, in that it is not all the partners that is involved in the management and running of the art partnership. Some partners or one partner may be running the business, and other partner is only contributes funds. And that one, because we have the other one that is very close to the limited liability, the money the fact that he contribute money, it is not even the fact, it is not even the reason that's make that partner a limited. It's limited in the sense that in case of any injunction, any case law, maybe the partnership has to pay damages. The limited partner cannot pay more than what he has promised or what he has already committed to that partnership, because partnership and sole proprietorship, they are like very close to each other. If me and Ahmad we are into partnership, for instance, and I'm general partnership, that is, I'm the one that is running the partnership for us. Ahmad only contribute maybe 100,000, and he has said in our agreement that this is only what his stake that he want to contribute in that partnership. So if any issue come, maybe we have somebody who want to claim a legal damage from us, and when the court judge, we need to pay that person like 500,000. So I that am the general partners, I'm the one that exposed to the liability. Ahmad cannot pay more than that 100,000, or if it has already paid the money before. So that is his own, that is his all liability. But for me, even if my own contribution in that partnership is 200,000, they have to come to my personal assets and get the additional money because I am general partnership. So when they ask you to differentiate, so one of the things that you have to know that for the general partnership, the liability is unlimited, but limited partnership, the liability is limited. And we also have what we call dormant partnership, dormant or sleeping partnership. For the dormant, it's the liability can be limited and it cannot be limited. It depends on the agreement, but it's dormant in the sense that it doesn't participate in the running of the business. Nothing concerns that person. That is the dormant partnership. So the partnership deed agreements that partner make, because you have to enter agreement when you want to form partnership. So that agreement is the one that they used to call partnership deed. That is the term that they used to call it. And you have things that you're supposed to have in your agreements. These are the things that you're supposed to have in your agreement. The name of the partnership, the parties to the partnership, that is each member, the general nature of the partnership business, it has to be contained in your agreement. The rights and duties of the partners among themselves and with third party as well as the firm. So this is where you will know if one person is limited. Everybody has to say, maybe I'm the one that's going to be managing the business, I'm managing part of the business, we have to have that set out, our rights and duties, mode of admission of new partners. Because in partnership, when you are doing, I think from in financial accounting, you are going to do that. You are going to preparing the account, admission of new partnership, retirement of new partnership. A partner can retire and you can also admit new partners. Okay, retirement of partnership asset, partnership account and or the dissolution of partnership. And sometimes you may just decide to dissolute the partnership, that we are bringing this to end. So all those things you have to make it, and based on that partnership act, the law, so it is already there. Some of these items, if we are not specifically write it out, so based on the acts, they already have the default answer for you. So one of the things that we said, for instance, one in part of your agreement, profit sharing, it has to be part of your agreement. Maybe if you are five, or let me say three, if you are three members, you may say profit is ratio 5:3:2. That is, one person will get 5 out of 10 of that profit. Another person will get 3 out of 10 of that profit. Another person will get 2 out of 10 of that profit. But in a situation where that thing is not agreed, it is not formally set out in your partnership deed. So according to the Partnership Act, the profit is going to be shared equally. So it's one of the requirements. So you are asked to read more on this. So the recent changes now, based on the new camera rules and what you are expected to know and during your exam. Now we have other type of the partnership. We have what we call limited liability partnership. This limited liability partnership, they make it similar to the normal company. So that is all the partner, they are separate entity. That partnership is not, it's also separate entities like companies, but they make it in form of partnership. So this limited liability partnership is more close to the company, where the old one are more close to the business name. That is sole proprietorship. So I think I can show you, and some of the cases, there are interesting cases like Solomon versus Solomon and Co. Limited. So that is one of the cases that determine that partnership is not the same thing as the partners. They are different, they are separate entity. So Solomon is the person, is the partners, and Solomon and Co. Limited is the partnership. So there is case between the Solomon versus Solomon and Co. Limited in 1897. So that is where the principle of separate entity start emanating. So under this new limited liability partnership, think we need to talk more on it. So this is the process if you want to register a company. So based on the new law before, can you see my screen? Can we see my screen?
Yes, sir.
All right.
All
So
right.
before,
So before,
Yes, sir, I can see. Can see.
we have business name that I've explained, and we have just partnership and company. So, but the changing now, we have business name, we have company, we have limited partnership, and we have limited liability partnership. So this is the new changes to the law. So if I click on this limited liability partnership, it will show me the business type. It has to be the same thing. For the limited partnership too, the business type, it has to be the same thing. So because they just have to be limited liability partnership. So the company, the company too, it has three subcategory: private company, limited by shares; private unlimited company; and public company limited by shares. So if you want to register any limited by guarantees, so there is different approach now. But under the company now, we only have private company limited by share, which is common. Private company unlimited liability. So this one is like the same thing as business name, because even the company is separate entity, but for you, anything that affect company can affect you because your liability is unlimited. And we have public company limited by shares. So for the private company, the minimum shares that you can register is 100,000. For the public company, the minimum shares that you can register is 2 million naira. And also the share difference from it depends on the type of the company. So some company, like if you want to register, for instance, yeah, they may requesting you that minimum share that you must register maybe is 400 million shares. If you want to register as a bank, it has a specific minimum shares that you have to register. So under the new law, Kama 20, this limited partnership now allow the creation of limited partnership. So where limited partners' liability are restricted to their investments. So as I explained before, so when you register limited partnership, so that means your liability is only limited to what you have invested in that company. So same as normal company. So and still the rule of 20 partners is still applicable. So unless the partnership is for cooperatives or legal or accounting firms. So and other things still intact, like the issue of profit sharing is also one of the area that people used to argue. If you don't agree during your partnership, even that one, that is why it is good to expose to law, especially business law. If you are dealing with people, if you enter any joint venture, not even partnership, with anybody that both of you are doing business together and you earn profit, even irrespective, maybe one person contribute 400,000, one person contributes 100,000. So if you have not agreed before that when we make this profit, me, I'm going to have 4 times out of 5. You are going to have 1 time out of 5. Since you only contribute 100,000, me, I'm contribute 400,000. If there is not that agreement have an issue, when you make your profits, you are going to share it equally. If you take that person to court, you are going to win because that is the rules. So another thing about this limited partnership, so is that the limited partner are not held liable beyond their investments, but still partners, they cannot withdraw capital unless agreed upon in written. That is another thing. So if you have not agreed before you form that I can collect my money back or I can withdraw my investment, so if there is no that agreement before you register and stamp, you cannot collect your money back. So they say the provision is to enhance the financial stability of the partnership. So, and the second one that we also need to know is limited liability partnership. We have limited partnership and we have limited liability partnership. So for this limited liability partnership, its purpose is just if you want to enjoy the same benefit as a company, but you are like accounting firm, and it will not be proper to call yourself a company. So you can go for limited liability company partnership. It's the same thing like you are operating a company. So and we have the company itself. So all this one, if you are reading this, you will see that everything that we have said is what is just in written. That's when we just solidify your knowledge. So and all this one, partners as an agent. So every partner in the partnership, they are the agents of that partnership. That means they can represent the partners. They can represent the partnership in any way. So they can represent it in any way. And as your agent, if you when you are reading this, you are going to get all the details. Do not do duty not to compete with the firm. Agents and principal, they have a fiduciary relationship. We cannot be in partnership together. Maybe we have accounting firm together as a partnership, and you that you are a partner, you still go operating maybe your personal accounting firm and compete with us. So it is not allowed. So you cannot be partnership here with the same objective and go somewhere else and still part of the partnership there with the same objective that you have here. So it is not allowed by law. So feature of limited partnership, you are going to read everything, more details. Feature of limited liability partnership. I even thought that this thing is not going to cover it, but they are there already. So this is fantastic because this study text was out 2021 and the law was actually enacted CAMA 2020. So it was reflected. So I told you one of the states that they have their own partnership act is Lagos. And those states that they don't have it, we are using the status of general applications. So document of incorporation, if you want to register, so what are the documents that you need to provide? You need to provide the proposed name of that business, the address, name of each partners, and the address of each partners. So all this one you are going to read on your own. So another thing that's also important, pre-incorporation agreements. An agreement in written made before the incorporation of a limited liability partnership between the person who subscribed their names to the incorporation document may impose obligation on the limited liability partnership if that agreement is ratified by all the partners after incorporations. So let me also take a few time. Almost reach our stoppage. This is very important. This thing is not only on partnership, it also applies to companies. They call it pre-incorporation agreement, or they may call it pre-incorporation contract. When a promoter, wants to form a business, who want to join us by this time? After we are finished, you want to join? Okay. At least you are going to meet something. So this the incorporation agreement is very important. When a promoter in the process of floating a company, so it may enter contracts before that company actually floated. Like for instance, if you want to register a company, let's say uh, you want to start a business of lock industry, for instance. So before you finish the registration, you get your documents. So you may have buy maybe the equipment that you need to start your operation, or you enter any agreements, any other thing that you have done before you register the company. And as I explained earlier, the promoter might not necessarily be the owner of the company. Maybe it's not even a subscriber to the company. The time subscribers, they used to use it to refer to the members of the company, that is those that they have shares holders, the shareholder of the company, or the partners in the partnership. So if the promoter have entered any agreement, according to the law, when the company is floated, there is nothing concern company, because company now has a separate legal entity, has its own name that can be sued and be sued on its own name. So it is not the company that is entered the agreement. Because the agreement have to be written in the name of promoters. Even if you write it in the name of the company, the court is going to nullify it. The agreement cannot persist the existence of the company. The person that it has not born, you cannot say he made agreement before he born. It is not possible. For this incorporation contract, there is something that we call ratification. The partners, that is what they are trying to explain here. The partners can ratify all the pre-incorporation agreement. All the shareholder of the company can ratify all the pre-incorporation contract. That is, assume, take it as they were the one that actually entered that agreement. So they call it ratifications. So another thing, situation of limited liability partnership. Not only limited liability partnership, for all partnership, there are factors, there are many instances that can cause the situation of the partnership. If one partner dead, the partner is ceased. In the real sense, when you are doing your financial accounting, you are going to know better. In the real sense, not that the partnership will cease to exist or they are not going to running it again, but it ceases in the sense that they are going to close their account first in order to determine their profit as of that time and give the shares of the dead person to his family. Then they will come back again. On the dissolution of the partnership, that is, if all partners say, okay, oh, we are not doing it again, oh, it also can call cessation of the company, and it can be a ruling by the competent jurisdictions. Maybe they declare insolvency, that they don't have money again, they don't have liquidity. So this issue of cessation is something that it can cause by many factors. So if the court rulings, it can lead to the cessation of partnership. And even admission of new partnership. When you are admit a new partnership, or when you are admit a new partnership, before you admit that partnership, you have to close your book, clear your account, let everybody, the existing partnership, let them know their profits. Because when you are operating, you cannot admit new partnership in the middle unless you close that account as of that point that you want to admit a new partnership. Then after you know the current position of existing partnership, then you admit the new partnership. So you are going to read more. All those one is the maintenance of account and other record. The record that you have to keep. Every company has to keep financial records to its registered office. Annual returns. So you have to file your annual returns with CAC. That is one of the requirements. So you are expected to do that 60 days after the close of your financial year, or 14 days after your annual general meeting. So all those ones for companies. Think when you are getting to company, all this one now they are telling us about the limited liability partnership. That specific registration, each partnership is required to register upon request a copy of its article of partnership. So you are expected to register with tax authority. So even if you are a business name, it is the owner that is paying personal tax, but you have to register with Federal Inland Revenue Services because every business are VAT collector, VAT collectors for the government. So this is the company we are explaining. So most of the thing with the limited liability partners are the same thing with the normal companies. So all this one is all this function of administrative committee. This one is applied if you are registering a public limited liability company. So a private limited liability company, it has to be stated on its memorandum of association that our company is private limited liability company. That is why it is compulsory for every company. What is going to end them is limited or LTD. And for the public company, what is going to end them must be PLC, public limited company. So you are going to read this. So I think I have explained this. For the public, I say minimum capital is 2 million. For the private, minimum is 100,000. So all these things I have explained. So we have small companies. So when you are doing your tax, everything by the time you are going up is going to be getting, don't let me use word of complicated, but getting advanced. For every regulatory, like this is CAC, this is CAMA, they have their own how they are like determine maybe your company is small company or a large company. For tax too, they have their own. So if your turnover is not more than 120 million or a such sum of money as CAC may fix. So that is how they are going to determine if you are a small company. If your net asset is not more than 60 million. So anything above that, they are regarding you as a large company. And the difference is in terms of your compliance, the money that you are going to pay for the annual return. So small company pay 5,000, large company will pay 10,000. So this is a promoter, any person who undertake to take part in the forming of a company. So with a reference to a given project. So all this one, we have explained it. We have explained it. This one, rescission of contracts. So if a promoter has breached any of his duty, the company may afford to rescind the contract in question. So this rescission of contracts is the opposite of ratification of contracts because promoter has entered contract before the formation of the company. When the company comes to life, if the members of the company see that maybe promoter has done this, has entered this agreement with his own interest, they may rescind. They may rescind on that contract that they will rebook it, deny it. That is rescission of the contract. If they see that the promoter was acting on their better interest, they may ratify the contract. That is, they accept the contract that uh, promoters make. This one is something related to the promoter, recovery of secret profit. If the promoter has made any profit they can recover it, recovery of damage and compensations. So pre-incorporation contract, I have explained it. They write it as a pre-incorporation agreement for the partnership. So for the company, pre-incorporation contract. So I'm going to read. And the procedure for the formation of the company. So I believe you have to, um, one of the two important documents that related to the company, we have object clause that will state what your company is into, and we have other two other company, memorandum of associations and article of association. So they call it memats, memorandum of association and article of association. So this article and memorandum of association, for the memorandum of association, it's dealing with external relationship. It's tell there it will show the name of your company, the register office of your company, the businesses or objects of your company, the nature of the company, if it is private or public. So anything that external people, and for the article of the association, it will deal like the rules that guide the management of the company. So like the company policies. So all this one corporate personality means that on that corporation, a company is now become a legal entity distinct from its member. So I have explained all this. So everything I think we have covered, you can see one of its rights can be sued and be sued on its own name. Everything that I have explained. And the perpetual succession, the company can continue exist even when the person that formed it or the first shareholders has passed away. I have explained it. The company can borrow it, you can transfer shares. So one of the things that I say maybe I have not made mention, this lifting the veil of the incorporation. So there are many good case laws that are related to it. So the lifting the veil means that when the members of the company, like the shareholders or the director of the company, they are using the company to do any illegal activities or anything that is not inside the object clause. The object clause of the company is the document that we list all the activities, all the type of the business that company claim that is going to be into. So when the company doing any other business that is not inside its object clause, they call it ultra in law, ultra. And when that happen, or the company is involved in illegal activities, the director, the owner, that we have said that they are separate from the company, they can be liable for it, they can be penalized for that, even though that they are using the name of the company. That is the lifting the veil of incorporation. Because you know it is the people that behind it. So you can see they list it: fraudulent trading, determination of resident of the company. So if they want to know, this one is for the tax purpose, your register, your principal office. So can we quickly answer this? A company in which the liability of its member is limited to the amount the member undertake to contribute in defense of its being wound up is called and what? So who will answer this? Who will answer this, or should I just call names? Jeremiah, are you with us?
Are you with us?
Yes, sir.
All
Yes, I'm
right.
with you, sir.
All right.
An- an-
An-
Answer
an-
this number one for us.
Answer this the one for us.
Hmm. Company limited by shares. A.
Company limited by
Company
shares.
limited by shares.
That is correct.
That is correct.
Yes.
Yes.
So, you know, we have public company and private company. And under private company, we have company limited by share, unlimited liability company. So, company limited by shares is correct answer. So, question two: a partner in a general partnership has implied authority to bind the firm by any of the following transactions except purchase goods necessary for the business of the firm. B. Employ workers for the firm, borrow money for the firm, and pledge the credits of the firm. Employ a solicitor to defend the firm in the court. Execute a deed on behalf of the firm. So they say that who is going to answer this for us? Any volunteer will still want me to call names? Okay, let me see my list. Uh, Hussein, are you with us? Hussein, are you with us? Okay, Ahmad, are you with us? Ahmad, Abdurrahman.
Sir?
Okay, can you answer question number 2 for us? A
The answer
partnership in a
is
general partnership has implied authority to bind the firm by any of the following transactions, except
answer is E, sir.
the answer is
E. E.
E. Execute a deed on behalf of the firm. Why do you choose E?
Since it's a partnership, so it has to be together. They can't just one person can't just execute a deed. It has to be all of them. Since a deed is where they seal their partnership agreement.
Yes, that is correct. So that means we are all following very well. So the following clauses must be contained in the memorandum of association of a company, except memorandum of association that we say the documents that describe the external relationship of the company, the name of the company, that the company is a private or public company, the name of the secretary and the auditors, the register office of the company shall be situated in Nigeria, that the liability of the member is limited by shares or by guarantee. So Who is going to answer this? Miriam, are you with us?
Yes, sir.
All right, can you answer this question 3 for us?
The answer is D, sir.
The answer is D,
Yes, sir.
that the register office of the company shall be situated in Nigeria. So D is one of the requirements. The memorandum of association dealing with is external documents, the external relationship. So the name of the company has to be there, and that the company is a private or public has to be there. So the name of the secretary and auditors of the company, C should be correct answer. Because the name of the secretary for a private company, it is optional to appoint secretary when you are registered, and you appoint auditor after your financial year if you have commencing the business. So those does not necessary to be there. So C should be correct answer. So question 4, which of the following indicates a partnership? Joint tenancy, tenancy in common, receipt of annuity, sharing of profits, sharing of gross return. So sharing of profits, we don't need to waste our time again. That should be a correct answer. The statutory body that is responsible for the registration of the company of in Nigeria, CAC, Corporate Affairs Commission. So, and this is another open-ended question. So you can see your answer, or maybe you have even see your answer here that I don't know. So I believe we have getting everything correct. So that will be the end of the class. So I will give only one person chance to ask question. One sub guy. Who want to be that person? No one. All right.
I want to ask, sir.
Okay.
Thank you, sir. Good evening. Good evening, everyone. Thanks very much for this wonderful lecture and presentation. So, I just want to ask personally, this is my first time, and I think fear has engulfed me, but God help me to live my fear this time. We heard that the syllabus has been changed, and the parks are not yet ready up till now. And just like you are putting us through, there are some changes, some amendments, most
Yeah.
especially by the boss. Okay, now in this case now, how are we going to rely on these old parks for our exams?
All right. Thank you. That is great question. But the first thing that I'm sure of, you join us late, because when
Okay,
we
yeah.
started, I think we have made provision for it. Because most of the thing that I'm saying, any topic that there is new updates, it has changed from what is inside the syllabus. So I'm indicating it for the syllabus. The content that we have there, the study test, The only thing that changes, they call it business name before. Now it's corporate and business law. But the content, the syllabus itself, if you check the syllabus, new syllabus, I mean, and compare it with the existing study tests that we are using now, they are the same thing. They are not changing anything. The chapter, everything are the same. So what change is the law, like this karma that I've made mention, and some
Mm.
other law, like all this Federal Reporting Council, internal control, uh, over financial reporting. So we have all those new laws that we are expecting that if the new study tests come out, it's going to be reflected on them. So anywhere that we reach, any topic that we reach, that we need that there is new updates here, we are going to lecture based on that new updates. So that is the approach. And you are required to, anytime you are in class, come with your paper and pen so that when we are saying something that is not inside the study tests, you can take note of it.
Thank you,
Is
sir.
that understood? All right, thank you. So I think we can call it a class now. Thank you all for your attention. See you next week at the same time. Have a wonderful night.